Stop what you are doing right now, because what I'm about to tell you might save you years of frustration and potentially thousands of dollars. Not because silver is complicated, but because the way most people buy silver is quietly inefficient, and that inefficiency, it doesn't show up immediately, it shows up later, when you try to sell, when you compare returns, when you realize you did everything right and still didn't get the outcome you expected. Here's the uncomfortable truth. Most silver investors are not losing money because silver is a bad investment. They're losing money because they're buying the wrong type of silver. And today we're going to fix that. Because in this video, I'm going to walk you through the absolute worst types of silver you should avoid in 26. I welcome back to John Forecast. If you're new here, this channel is all about breaking down real, no hype insights into gold, silver, commodities, and macro trends, specifically tailored for investors in the United States. No fluff, no gimmicks. Just what actually matters for your money. The best type smart investors are quietly stacking right now, and most importantly, how to think about silver like someone who actually wins long term. And trust me, what's coming later in this video about high premium silver might completely change how you look at your stack. But before we get into the best and worst, we need to talk about something most people completely ignore. And that's how you define your role in the silver market. Because whether you realize it or not, you are either an investor or a stacker, and those are not the same thing. An investor is usually thinking in terms of price movement. They're looking at charts, trends, macroeconomics. They're asking, is this silver going up? Is this a good entry point? When should I stacker? On the other hand, is playing a different game entirely. They're not trying to time the market. They're trying to protect purchasing power. They're converting paper money into something real, something tangible, something that exists outside the financial system. Now here's the key insight. Even though these two mindsets are different, they both rely on one thing: efficiency. Because whether you're investing for profit or stacking for security, the type of silver you choose determines your outcome. And that's where most people go wrong. They focus on price, but they ignore structure. They ask, how cheap can I get silver? Instead of asking, what type of silver gives me the best long-term advantage? And that one shift in thinking changes everything. So let's start with the mistakes. Because avoiding the wrong moves is always more powerful than chasing the right ones. Let's start with something that looks attractive, feels unique you, and often tricks beginners. Silver shot. Now, if you've ever seen silver shot, you know exactly what I mean. It looks like tiny metallic beads, almost like liquid silver frozen into droplets. And at first glance, it feels like you're getting something special, raw, industrial, different. And here's the hook that pulls people in. It's usually cheap, sometimes even close to spot price, which makes people think, I'm getting more silver for less money. But here's the problem. Silver shot has no identity, no official stamp, no weight marking, no standardized form, and that creates a massive issue when it's time to sell. Because when you bring silver shot to a buyer, the first thing they think is not, great, I'll buy this. The first thing they think is, how do I verify this? Verification creates hesitation, and hesitation reduces price. Most of the time, your only realistic exit is a refiner, and refiners don't operate like retail buyers. They don't care what you paid. They don't care about market excitement. They care about processing cost, which means they discount what they pay you, so even if silver goes up, you still don't get full value. Let that sink in. You made the correct macro call. Silver price increased, but because of the form you chose, your returns were capped. That's not a silver problem. That's a structure problem. Now here's where it gets even more interesting. A lot of people who buy silver shot think they're being smart. They think they've found a hidden deal, but in reality, they've traded long-term liquidity for short-term savings. And that trade almost never works, because the goal is not just to buy silver. The goal is to buy silver you can actually use. Now let's move to something even more controversial, sterling silver. And I know this one is going to divide opinions, because technically there are people who make money with sterling. They go to estate sales, thrift stores, garage sales, they find undervalued pieces and they flip them. But let's be honest, that's not most people. Most people are not treasure hunters. Most people are structured buyers. And in that context, a sterling silver becomes inefficient because it's only 92.5% pure, which means every time you buy it, you're not actually buying full silver content. You're buying a mix. And that complicates everything. You have to calculate melt value. You have to verify authenticity. You have to deal with inconsistent forms. And when it's time to sell, you're usually back to the same problem: refiners, discounts, lower payouts. And here's the hidden risk most people don't talk about. A lot of items labeled as sterling are not solid silver. They're plated, and unless you really know what you're doing, you can easily overpay for something that has very little actual silver content. So unless you're experienced, unless you're hunting deals, unless you understand this deeply, sterling silver is not where you want to build your stack. Now let's talk about the biggest trap in the entire silver market. And this is where things get emotional: high premium silver. This is the category that pulls people in the fastest and hurts them the most over time, because this is where logic gets replaced by excitement. You see a coin, it looks incredible, perfect design, limited mintage, maybe it's labeled as rare or exclusive, and suddenly you're not thinking like an investor anymore. You're thinking like a collector. Now let me be very clear, there is nothing wrong with collecting, but collecting and investing are not the same thing. Because when you pay $80,000, $100, or even ounce 200 for 1 ounce of silver, you're not buying a story. And stories are unpredictable, because here's what most people don't understand. When silver prices rise, premiums often fall. That means even if silver goes up, your collectible coin may not increase at the same rate. In fact, in many cases, it underperforms. So you end up in a situation where you were right about the market, but still didn't make money. That's one of the most frustrating outcomes in investing, and it happens more often than people think. Now pause for a second, because this next question matters. Are you buying silver to build wealth or to feel like you're building wealth? Because those are two very different things, and your answer determines everything that comes next. The best types of silver and how smart money thinks. Now that we've covered the biggest mistakes, let's flip the script. Because avoiding bad decisions protects your downside, but choosing the right types of silver, that's what builds real wealth over time. And this is where most people start to separate themselves from the crowd, because the goal is not just to own silver. The goal is to own silver that works for you, not against you. So let's start with something simple but extremely powerful, 1 ounce bullion coins. Now on the surface, this doesn't sound exciting. In fact, a lot of people overlook these because they're too common, but that's exactly why they work, because in markets, what's common is often what's most trusted. And trust is everything when it comes to liquidity. Think about this. If you walk into a coin shop in the United States with a well-known government minted silver coin, you don't need to explain anything. You don't need to prove anything. You don't need to convince the buyer. They already know what it is. They already trust it. And that instantly puts you in a stronger position. Now here's the part most people don't think about. Liquidity is not just about selling. It's about how easily you convert your asset into value without friction. And friction is what kills profits. Because every moment of hesitation from a buyer translates into a lower offer. That's why recognizable coins dominate the market. They remove doubt. They remove negotiation pressure. They make the transaction simple. Now let's go one layer deeper. Even within bullion coin strategy, some carry higher premiums. Some are more widely recognized globally. Some are easier to flip in private markets. And smart investors pay attention to these differences. Because again, efficiency is not just about price. It's about the full cycle. And try holding exit. Now here's a question you should ask yourself. If you needed to sell your silver tomorrow, would it be easy? Or would you have to explain what you own? Because that answer matters more than most people realize. Now let's move to one of the most underrated forms of silver, and this is where things start to get really interesting. Junk silver. Now I know the name sounds terrible, but in reality this might be one of the most practical forms of silver you can own. These are older coins, typically pre-1965 in the United States, made from 90% silver. And they have something that modern silver doesn't always have. History recognition and trust at a very basic level, because these coins were once used as actual money, which means people instinctively understand them. Now here's where junk silver becomes powerful. It's divisible. You don't need to sell 1 ounce at a time. You can sell smaller amounts, which gives you flexibility, and flexibility is a huge advantage in uncertain markets. Now think about a scenario where silver prices spike suddenly, or where liquidity becomes tight. Would you rather have one large bar or multiple smaller units you can sell individually? That's where junk silver shines. But there's another advantage, and this one is often overlooked. Counterfeiting. It's extremely rare to see fake junk silver because it's just not worth the effort, which means trust remains high, and high trust leads to smoother transactions. Now here's the key point. Junk silver is not about maximizing profit, it's about maximizing usability, and in certain scenarios that becomes more valuable than price alone. Now let's move to what I consider the most efficient category in the entire silver market, generic silver rounds and bars. This is where things get very clear, because this is where you strip away everything unnecessary and focus purely on metal. No branding premium, no collector hype, no emotional pricing, just silver. And that simplicity is what makes it powerful, because when you buy generic silver close to spot price, you minimize your downside. And when silver moves up, you capture that move more directly. There's no drag, no hidden cost, no premium barrier to overcome. Now here's something most beginners don't realize. When you're stacking over time, even small premium differences add up. $2 extra per ounce might not feel like much, but over hundreds of ounces, that's a significant difference, and that difference affects your total return. Now let's take this one step further. Imagine two investors, both buy silver for 5 years. One focuses on low premium generic silver, the other consistently pays higher premiums for branded or collectible pieces. At the end of 5 years, even if silver price is the same, their outcomes are different. One has more ounces, more flexibility, more options. The other has fewer ounces and more dependency on premium recovery. That's the difference between stacking strategically and stacking emotionally. Now here's where things get even more interesting, because at this point, most people start thinking, okay, I'll just buy generic silver and that's it. But that's not the full picture, because smart investors don't go all in on one category. They build leylands. They build layers. They think in systems, because each type of silver serves a different purpose. Generic silver gives you efficiency. Government coins give you liquidity. Junk silver gives you flexibility. And when you combine them, you create something much more powerful than just a stack. You create a system that works in different market conditions. Now let me ask you something. What happens if silver prices stay flat for the next 2 years? What happens if volatility increases? What happens if premiums spike again? If your strategy only works in one scenario, it's not a strong strategy. That's why diversification within silver matters. Not just how much you own, but how you own it. Now let's go deeper into how smart investors actually think. Because this is where everything changes. Most people approach silver with a simple mindset. Be low, sell high. But real investors think differently. They think in terms of efficiency. They ask better questions. They don't just ask, is silver cheap? They ask, is this the most efficient way to own silver right now? Because cheap doesn't always mean good, and expensive doesn't always mean bad. Context matters. Strategy matters. Now here's a real-world scenario. Investor buys only high premium coins. Investor B buys mostly generic silver with some government coins mixed in. 5 years later, silver rises significantly. Investor B benefits immediately. Investor A, still trying to recover premiums. Same market, different outcome. Now for the scenario. What if there's a supply shortage? What if premiums explode? Now investor A might temporarily benefit. But here's the key insight. Those situations are unpredictable. And building a strategy around unpredictable events risky. That's why consistency wins, not timing, not emotion. Consistency. Now here's the moment where everything should click. Because this is where you stop thinking like a buyer and start thinking like an allocator. You're not just buying silver. You're allocating capital into different forms of silver based on what they do best. And once you see it that way, your entire approach changes. Because now you're not chasing deals. You're building structure. And structure is what creates long-term success. Advanced strategy, psychology, and final takeaways. Now here's where things get serious. Because up to this point, we've talked about what to avoid. We've talked about what works. But this is the part most people never fully understand. How to actually build a silver strategy that holds up over time. Because knowing is one thing. Executing consistently, that's where most people fail. And it usually doesn't happen because of lack of knowledge. It happens because of small mistakes repeated over and over again. Let's talk about those. Because these are the silent wealth killers. The first one is something that feels harmless, but compounds aggressively, overpaying premiums. Now I know we touched on this earlier, but this goes deeper than most people think. Because it's not just about one bad purchase. It's about you buy one coin at a high premium, then another, and suddenly your entire stack is built on inflated entry prices. And here's what happens next. The market doesn't move as fast as you expected. Silver stays flat. Maybe it even dips. Now you're not just waiting for silver to go up. You're waiting for silver to go up enough to recover your premiums first. That's a completely different game. And most people don't realize they're playing E until it's too late. Now let me ask you something. If silver stayed exactly where it is today for the next 18 months, would your strategy still really feel stuck? Because that's the real test. Not when everything is going up E, but when nothing is happening. Now let's talk about another mistake that's even more dangerous. Ignoring liquidity. Because most people focus on buying. Very few think about selling. But selling is where everything becomes real. That's where your decisions get tested. And this is where structure matters more than ever. If your stack is filled with random pieces, unknown brands, hard to verify items, you're going to face resistance. Buyers will hesitate. Offers will drop. And suddenly you're not negotiating from a position of strength anymore. You're negotiating from a position of urgency. And urgency kills leverage. That's why earlier we talked about recognizable coins, standardized bars, trusted forms of silver. Because when the time comes, you don't want to explain what you own. You want the buyer to already understand it. Now here's another mistake that doesn't look like a mistake. Going all in on one type of silver. This one is subtle because it feels smart. You find something that works, maybe generic rounds, maybe junk silver, and you double down. You simplify your strategy. You simplify, you go all in, but here's the problem. Markets change, conditions shift, and when your entire stack is built around one type, you lose flexibility because different forms of silver perform differently in different environments. And if you're only exposed to one, you're limiting your options. Smart investors don't do that. They build balance. They build layers. They think in terms of adaptability, because adaptability is what protects you in uncertain markets. Now let's zoom out for a second, because this is where everything connects. The difference between average investors and smart investors is not information, it's decision making. Average investors react. Smart investors prepare. Average investors chase trends. Smart investors build systems. Average investors think short term. Smart investors think in cycles. And once you understand that, everything becomes clearer. Because now you're not just asking, what should I buy? You're asking, how does this fit into my overall strategy? And that one shift changes everything. Now let's make this real. If you were starting from scratch today, how would you build a silver stack the right way? Not perfectly, but realistically. You start with a foundation, and that foundation is low premium silver, generic bars. This is your core. This is where you build weight, because at the end of the day, ounces matter. Then you layer in liquidity, government coins, recognizable pieces, things that can be sold quickly without friction. Then you add flexibility, junk silver, smaller denominations, pieces that give you options. And just like that, you've built a stack that can adapt. A stack that works in different scenarios. A stack that doesn't rely on one outcome. Now compare that to someone who only buys high premium collectibles, or someone who only buys one type of position. Who has the strong even close? Now here's something deeper, because this is the part most people don't expect. Silver investing is not just about money, it's about psychology, because markets don't just test your knowledge, they test your emotions. They test your patience. They test your ability to stay consistent when nothing exciting is happening, and this is where most people break. Because when silver drops, fear takes over. When silver spikes, greed takes over. And both of those emotions lead to bad decisions, bleed late, selling too early, chasing trends, ignoring fundamentals, and slowly losing efficiency. Now here's the difference. If your stack is built on hype, you're always reacting. If your stack is built on fundamentals, you're in control. And control is everything. Because it allows you to stay calm when others panic. It allows you to stay patient when others rush. It allows you to make decisions based on logic, not emotion. And that's what separates people who win from people who don't. Now let's bring everything together. The worst types of silver are not bad because they're useless. They're bad because they don't serve your goal. They create friction. They reduce efficiency. They limit your options. And over time, that adds up. The best types of silver do the opposite. They give you liquidity. They give you flexibility. They give you efficiency. And most importantly, they give you confidence. Because you know what you own, you know why you own it, and you know how it fits into your strategy. Now, before we close, I want you to think about this. 5 years from now, when you look back at your silver journey, what do you want to see? Do you want to see random purchases, impulse decisions, and missed opportunities? Or do you want to see a structured, intentional approach that actually worked? Because that future starts with the decisions you make today. Not big decisions, small ones, repeated consistently. Take away now, don't chase silver. Build a system around it. Because systems outperform emotions every single time. If this video changed the way you think about silver, do two things. Hit the like button and subscribe to the channel. Because this is the kind of content that actually makes you a better investor. And more importantly, share this with someone who's getting into silver. Because most people learn these lessons the hard way. And they don't have to. Drop a comment below and tell me what you're stacking right now. I read every single one. And I'll see you in the next video.